All right, welcome to our daily market brief. Today we've got a real head scratcher for you, something happening in the global energy markets that just doesn't quite add up. A major conflict is raging in the Middle East, which usually means only one thing for oil prices. But this time, something very different is happening.
And this is the big mystery, right? You've got a major war underway for 25 days in the Middle East. History, common sense, everything tells you oil prices should be going through the roof, but they're not. They're actually falling. So what on earth is going on here?
And I mean, this isn't a small difference. We're talking about experts, major players, forecasting oil to hit $150, maybe even $200 a barrel. But look at the reality. Brent crude is trading below $95 and WTI is below 90. Those predictions aren't just wrong, they're on another planet compared to what's actually happening.
So to get to the bottom of this, the analysis we're looking at points to this really key distinction. You have to understand the difference between the paper market for oil and the physical market. They sound similar, but they are two very different worlds. And how they interact, well, that's where the answer is.
Okay, so let's start with the paper market. Now, this has nothing to do with actual physical barrels of crude oil. Think of it as the financial world. It's all about futures contracts, options, digital trades happening on screens. And the source material suggests that this market can be, let's say, influenced. Big players can create downward pressure on prices here, which then sends a huge signal to the real physical world.
But here's the thing. You can only push prices down on paper for so long if there's a real-world shortage. So, is there? What's actually happening in the physical market? Well, according to this analysis, the oil is still flowing. Iran is shipping to India. Russia is still selling massive amounts to both India and China. And, maybe most importantly, there's this east-west pipeline in Iran that acts as a kind of bypass for some of the riskiest choke points. Long story short, the physical supply just isn't as tight as you'd think from watching the news.
All right, so the oil market itself is giving us some mixed signals. But there's another massive clue, and it comes from a place you might not immediately think to look, the U.S. government bond market. Let's see what it's telling us.
So the 10-year Treasury bond, you can think of this as the market's fear gauge for inflation. It's super important. When the yield, that's the interest rate, on this bond goes up, it means the big money, the smart money, is getting really worried about future inflation. But when that yield starts to fall, it means that fear is going away.
And what has the 10-year yield been doing lately? Well, after touching that high of around 4.5%, it started to drop. Now, this is a huge signal. The bond market, which a lot of people call one of the smartest rooms in the world, is basically saying it does not see a massive oil-fueled inflation crisis coming. It's betting against disaster. Okay, so if the markets are staying pretty calm, what are they seeing that maybe the rest of us are missing? The analysis we're looking at points to geopolitical signals. It's about reading between the lines of what world leaders are saying and doing. It suggests the market is anticipating that this conflict is headed for a resolution.
And this brings us to a really powerful quote that the source material highlights. In a recent interview, former President Donald Trump said, and I quote, "We will take control of what we want." Now, at first glance, that sounds pretty aggressive, right? But the analysis here argues there's a deeper meaning.
The theory goes that this statement isn't just about Iran. It's about a much bigger, much broader strategy, securing control over the world's most critical trade choke points. We're talking about the Strait of Hormuz, sure, but also the Panama Canal, and even those new passages opening up in the Arctic. From this viewpoint, the current conflict is just one move on a much larger global chessboard.
And while all the public rhetoric is fiery and loud, there's some very quiet, very high-level diplomacy going on. This analysis points to Pakistan, which is reportedly working on behalf of China, trying to set up a summit between the US and Iran in Islamabad. They have apparently said they could get it done in a week if both sides just say yes. That tells you there's a powerful push for de-escalation happening behind closed doors.
So let's connect all these dots and really understand the market's logic here. See, the big money, the smart money, it doesn't wait for the official press conference announcing peace. It acts before the good news is public. They make a low and start buying before the headlines change. The fact that both oil prices and bond yields are falling, well, that suggests the market has already decided that the peak of this crisis is behind us. They're betting the worst is over. Okay, so when you pull all these threads together, you get a fascinating picture of how markets are reading these huge geopolitical events. But the source material doesn't stop there. It actually zooms out and poses a really provocative question about a much bigger energy issue, specifically over in Europe.
So Germany's energy minister came out recently and basically admitted that shutting down all their nuclear power plants was a mistake. But the source material asks a really challenging question. Was it actually a mistake, or was it a deliberate policy with a very different goal in mind?
Now, this is a pretty heavy theory, so let me just lay out the argument from the source material. It claims that bodies like the International Energy Agency gave Germany clear warnings that the shutdown was a massive error, but those warnings were ignored. The analysis argues this wasn't an accident, but a systematic policy to get rid of stable, reliable energy sources, and the stated goal, according to the source, was to create a situation of impoverishment and control over European citizens, kind of modeling it after China's system of population control. It's a really provocative idea to leave you with, and it circles back to that core theme, questioning whether these major global events are just accidents or if they're part of a much larger plan.